Have no fear. The Top That Trade guys are here. Joining us right now, Alan Knuckman, the Chief Market Strategist at BullseyeOption.com, and Phil Flynn, a Fox Business News contributor, here for our Trader Game. Rounds number 1, Battle Royale. It's Bulls versus Bears, with the S&P and NDX both bouncing 20% from those lows of 2 months ago. Is this a bear market rally, or is the bull back?
Well, what's next is very important. Anything can happen, but for me, it was critical to get back above the 4,200 in the S&P, the high. Now let's see if that holds as a support level for another leg higher. Every time in history that we bounce back halfway from the drop from the top, it's made new all-time highs. And a full V recovery would target the distance of that drop on top for an S&P 6,000. So I wouldn't say never. It's interesting to see some analysts talk about a bear market, and I've seen some people comparing this to 2000 and comparing it to 1929. It's totally different. We've got unemployment at 3.5% or whatever, and corporations are making money. So I think those comparisons are void.
I agree. I think the market looks very, very bullish here. And I think, when everybody was so negative, it didn't really match up with the type of earnings we were getting.
Right.
But make no mistake about it, there are some challenges, right? We've had inflation that seems to be moderating just a little bit. We've had a big drop in energy prices, and the Federal Reserve is still very worried about inflation.
Round number 2, drilled, baby, drilled. Crude oil prices crumbling from about $110. What do you do now that energy is shifting?
I think the people that sold the oil market the last couple of weeks or the first 2 weeks of August are out of their minds. I don't know what the heck they're looking at. We saw, but it's not unusual in the first 2 weeks of August, to see prices go down. Volume's very light. And if you look at the volume on the sell-off we saw in oil, it was with historically low volume. Fundamentals didn't matter. We were selling on fear. We're fearful we're going to go into a recession. We're fearful that China's going to stop consuming oil. But if you look at the actual numbers, if you look at where supplies are, we're below average in every major category. So I think that sell-off is going to be a great buying opportunity. And a little tip, if you look at oil prices, 14 out of the last 15 years, they've gone up the last 2 weeks in August. Now, that's no guarantee that they will today, but I think the setup is looking very strong that we get that same kind of rally.
I think the lesson we learned is you want to buy when things look bad, and energy's had a little bit of an unwind, but it's still a very, very strong trend. One way to play it would be XLE, the ETF. You don't have to pick the individual stock.
Round number 3, buyback attack. The new 1% tax on stock buybacks could hurt some stocks. Which one of the big buybackers is a buy?
When you dial down the $1 trillion in stock buybacks that they had last year, is a big number, but we also had $10 trillion in corporate profits last year. So this works out to be 0.001 of the corporate profits. And so that's just a rounding error. I don't think it's going to have any impact except psychologically, because some people would say it could be a slippery slope.
I think it is a slippery slope. And you know what? I don't think the government should be penalizing companies for doing what they should be doing, when stock prices are high. I mean, this is a sign of a strong company.
Here's your bonus round question for today. Can you tell me if any of the following tickers are fake? School, teacher, class.
They're all fake.
This is ticking me off, these tickers. I'm going to say, what was it? School, teacher. I'm going to say the middle one, teacher.
Alan wins this week. All of those tickers are made up, but we do want to wish all students a great year ahead. Study hard. Go to businessfirstam.com for where to see our show on TV.